Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Thursday morning, lots to digest. Escalation in Iran-Israel conflict, the US Fed outcome that we had last night. We will be discussing what it means for the markets going forward, and lots of other stocks to be watched out for in trade as well. But we will be first focusing in on the top headlines at this hour before we get on board our experts to decode the Fed's latest move. Well, the US Federal Reserve holds interest rates steady and in fact, it also stuck to its earlier forecast of 2 more rate cuts in 2025. Powell sees inflation rising above 3% in the coming year. President Trump renews calls for an interest rate cut, criticizing the Fed chair, while Powell also notes in his statement that the recent uptick in inflation expectations could be due to tariffs. On to Wall Street action then. Wall Street ended narrowly mixed. Dow ended modestly lower. S&P 500 was flat and the Nasdaq in fact edged up as Fed held interest rates steady. But the forecast was of higher inflation and lower growth. Dollar saw some bit of weakness while treasury yields held steady. Asian markets started the day with tepid moves following Wall Street moves as investors assess Fed decision and the Iran-Israel conflict. GIFT Nifty is indicating a lower start, but in the pre-open we are trading largely in the negative territory. Let's see how we open up for trade. Oil prices edge up on the possibility of supply disruptions from the Iran-Israel conflict and potential direct US involvement. Gold as well inches higher. Well, the Iran-Israel conflict rages on with ongoing aerial strikes. Iran's Khamenei warns US of irreparable consequences if it launches strikes, even as President Trump claims Iran is defenseless. Meanwhile, Israeli media reports the latest Iranian attack was intercepted by US air defense systems. Well, let's bring on board our first guest for today, important global voice joining in, Peter Cardillo, Chief Market Economist, Spartan Capital Securities. Lovely to have you on the show, Peter, after a long time. I know it's late night there, but let's decode what the Fed has really said about inflation, growth and the future trajectory from here. Of course, we had, the Fed holding on to rates that was widely expected in line with consensus. It has stuck to 2 rate cuts for 2025, but for 2026, only 1 rate cut. Market reaction was fairly measured. We hardly saw any reaction on dollar and yield as well. Your first thoughts as to what the Fed has done?
They held rates unchanged. The market knew that, and of course, they did lower economic forecast somewhat, and they added perhaps one new phrase in the communique, but in essence, the dot plot seems to be indicating just 2 rate cuts in 2025 and 1 less in 2026. So and less in 2026. So basically, the Fed still is holding off because of the tariffs. They made that quite clear that until they have full evidence of how the tariff inflation will shape up, that they're going to be very cautious. And I think that was the right decision because we don't know how the tariffs will affect inflation. And I guess if there was a surprise, the surprise is that they basically indicated that perhaps stagflation is going to be the feature as the tariffs kick in. So in order for that to happen, of course, everything has to go according to the Fed's plan. Now, what happens if the economy gets too weak? I think that changes the perspectives, and I think that we probably could see a 50 basis point cut in September as opposed to 25 basis points. So again, it's data dependent, and the big question mark is what revolves with the tariffs.
Hmm. So, talking about the quantum of rate cuts, you said we could see 50 basis points if the economy weakens a lot from here. So, would that mean that you would be expecting somewhere around 75 basis points if at all, the US economy worsens? Because the recent data hasn't been that encouraging. It has been mixed. Inflation saw some bit of a cool off, but retail sales data was fairly weak. So, in terms of quantum, would you say that there is a possibility of 75 basis points as well?
Um, Well, let's put it this way. I'm basing a 50 basis point cut if we see consumer spending really fall off a cliff. Now, if you look at the latest macro news, most of it indicates that the economy is slowing and that the consumer has pulled back, and we saw that yesterday with retail sales. Now, that would have to worsen during the summer months, and I think it would have to worsen drastically. And that's what I'm basically basing on perhaps a change of heart of 50 basis points. President Trump kind of thinks that the Fed is behind the curve by 100 basis points. And I'm not sure that that's the case, but um, if if consumer spending really takes a dive and we see negativity in terms of GDP, then I think the Fed has no choice, and you you know as to rate as to by at least 50 basis points. And then if they do, they could hold off, and that means there you have your two rate cuts combined in one.
Okay, got your point. Peter, lastly, talk about the conflict between Iran and Israel. Markets are watching out for what Trump does next because, whether they take a decisive action or not. But if they do press ahead with the decisive action strikes on Iran, how would the markets really read into it?
Well, initially, obviously, it would be negative. In fact, if you really analyze the situation, the markets so far have been pretty uh, have been trading relatively in a narrow trading range. Yes, we've been down, but nothing drastically. And I think the reason for that is that there's a lot of hope that the United States is not likely to enter a full war. Uh, and I think that cooler heads will prevail in the coming days. I think there's a good chance that we avoid entering this conflict, and that some sort of an agreement can be reached. And I think President Trump alluded to that just today, saying that Iran does want to talk, and I think that that's going to happen. Now, if we are excluded, and there is some sort of a mediation, and the mediation is successful, then I think the crisis blows over rather quickly. If not, then of course it could be very, very negative for the markets. And I say this because if you begin to um, uh, uh, have if you begin to impact the Iran's oil infrastructure, the price of oil would probably jump up to $200 plus, and obviously, if it stayed there, you'd be facing a serious crisis. And I think all sides know that, and so
Right.
in my opinion, they will try to avoid that.
Sure, got your point, Peter. Of course, the situation is fluid, and if there is decisive action by US, perhaps the market will, see a negative impact, at least in the beginning. But thank you, Peter, for taking out time and joining in. I know it's pretty late there. Appreciate your taking out time and staying up and joining in for the interview. Look forward to our next interaction as well. Thanks a lot for joining in.
Thank you for having me.
Thank you. Well, on that note, we're getting the first ticks. The markets have opened up Just want to see what they are doing right now. In the pre-open, they were indicating a negative start, and yes, it has been a negative start, so to say. No big cuts, but it's a 40-point cut on the Nifty as we speak. We are above that 24,750 mark. On the Sensex as well, it's just about a 140-point cut. The mid-cap index, marginally in the green, but let's see whether it manages to hold on to these slim gains or not going forward. As of now, the breadth is looking positive, skewed in favor of gainers. 830 advances to 650 declines. Let's see. Let's wait for it to settle to really call a direction. In terms of the sectors, the Nifty Bank Index is down 67 points or so. It saw a good recovery from the day's low yesterday. In fact, banks and autos were the only sectors that were gaining yesterday. You had other sectors like IT, metals in the red and emerging as top sectoral laggards yesterday. But today, of course, the Nifty Bank Index has also opened up with a negative bias. Autos mildly positive, but nothing great to really talk about. Realty also mildly positive, but all the other sectors are trading with cuts. No big cuts as such right now, but they are all trading down by 0.2% or 0.3% or thereabouts. IT almost 0.5% cut there. So top sectoral laggard yesterday. IT was among the top sectoral laggard once again. Remember, IT has been seeing good buying interest in recent times, but over the last couple of sessions, we've seen some bit of profit booking kicking in the IT space. Today we have some brokerage notes on IT, where some brokerages are saying sell on rally or sell on rise should be one strategy for the IT pack. But we'll also touch base with Chandan Taparia and ask him what he thinks about IT stocks right now. But in terms of individual movers, then very quickly, top gainers, Hero MotoCorp. This stock was a gainer yesterday. In fact, auto stocks were on the gaining side yesterday. Today as well, we are seeing Hero Moto taking the lead. Wipro, Apollo Hospital, Titan, Cipla, Bharti Airtel, Bajaj Auto, Bharat Electronics, these are some of the other gainers. Kotak Mahindra Bank was under pressure yesterday. Today seeing a bit of a green tick. What's not doing well? Infosys, top laggard. IndusInd Bank, the stock was up almost 5% yesterday on the back of an upgrade, but today some bit of selling pressure there. ONGC, Adani Ports, TCS, Tata Steel are some of the other movers. But let's touch base with our technical expert then, Chandan Taparia of Motilal Oswal. He's been waiting by for quite some time. Chandan, lovely to have you on the show. Once again, never mind the kind of news flow that's coming out of, the Iran-Israel conflict. We've managed to defend that 24,800 mark quite smartly. Even yesterday, we pulled back from the day's low. Today, we are around that crucial level. What is it looking like? Do you think we will shut shop above that level today as well? What are the charts telling you?
Good morning. Thanks for having me. I believe the market is likely to be in a broader range. We have seen that from last almost 5 weeks, or in fact from last 28 trading session, the index got stuck in between 24,442 to 25,200 marks. Whenever it comes near to the support, some of the buying interest emerges, but at the same time, it fails to hold about 25,050 or 25,200 marks. So we are again in a range. The good part is now FMC meet output is over, so theta decay will be there. I believe the market may find support at lower band, but again upside is going to be restricted. So we have to play the range between 24,600 to 24,950 as of now. So not having the aggressive stance, but looking for support based buying at lower levels. I believe in this scenario, when index has got stuck in a range, selective stock or sector can do well rather than getting the stance on the broader market. I believe that a couple of more days will be in the consolidation phase, and then towards the end of monthly expiry or at the beginning of July expiry, we might see the fresh leg of rally. So as of now, 24,600 to 24,950 is going to be the probable trading range where we have to find the swing on both the side in the index.
Got your point. What about the Nifty Bank Index? Yesterday we saw the index come off the day's low. In fact, managed to end in the green, but this morning again, it's looking a bit iffy around 55,700. The next support to watch out for on a Nifty Bank Index?
So Bank Nifty formed a bearish candle on the last week, but in this week, in last 4 days, it got stuck in a range. We have noticed that sustained buying interest is clearly visible near 55,500, but at the same time, 56,000 is providing hurdle. So 55,500 to 56,000 is immediate range. and range breakout on either side could come as the next leg of rally. So as of now, we are in a range bound bias and we have to trade this range as well.
Okay, range bound bias, when it comes to both the indices, Nifty and Nifty Bank Index. But very quickly, what about IndusInd Bank? Is it a buy on dip? Yesterday it saw a good up move. Last 3 months the stock has done very well. Do you think it's bottomed out and 1000 levels cannot be ruled out in the coming weeks?
So IndusInd Bank is a quite volatile name. Albeit the stock was in news, so was witnessing sustained swings on both the side. Couple of days back, it made high near 857, drifted to 806. Even the last trading session, it headed to 855, failed to surpass the previous hurdle over 857. But bias is turning to slightly positive. So I believe 820 can be utilized as a buying opportunity. Upside first level will be 857, and above that, short covering trigger can take it towards 888. So likely to be volatile, but with support of 821 can attempt for some buy on decline stance in the counter.
Okay, buy on declines. Before we move on to our queries, I want to get your thoughts on some of these, auto names, especially the two-wheelers, the likes of Eicher. You have Hero Motocorp and Bajaj Auto. Which one is looking more attractive now? Yesterday, there was news flow, source-based news that the government may look at Australia as an alternative source for rare earth magnets. I think because of that, we saw a turnaround in the auto pack yesterday, and today as well, autos are outperforming the other indices, so to say. So between or among these three names, which one would be a good bet for the next couple of days?
I believe auto counter could be in focus, and the good part is that Maruti also given a consolidation breakout. Eicher Motor has made the bottom. Even the other name are also in action. So Eicher Motor, I think one can buy with support of 53.40, or upside target towards 56.20. Hero Motor, I'm looking for a small follow-up because I think almost it has been 25 days of the consolidation where it took multiple support near 41.88, but hurdle is clearly visible near 44.80. So small follow-up could lead to a range breakout. So with support of 42.85, one can look for an upside target towards 4600. So I believe most of the auto counter in focus, whether we talk about the Eicher Motor, Hero Moto, Maruti.
Okay, fine. That's the view then. Let's shift focus and look at the queries then. Want to get in your thoughts on the Bajaj twins, Bajaj Finance and Bajaj Finserv. Debu K has a question on Bajaj Finserv. Can you share your thoughts as to how one should approach these two names right now?
So Bajaj Finance and Bajaj Finserv have seen some profit booking, or in fact some corporate action was seen in Bajaj Finance. I think split of the counter. The good part is 888 could provide as a major support. 960 could be a hurdle. So I think use the buy on decline stance here in Bajaj Finance. Talking about Bajaj Finserv, again I believe a consolidative move is clearly visible. Clearly the range bound bias. Multiple support at 1945, hurdle at 2050. So we have to play the broader range of the counter. But again, buy on decline can be applied along with the broader market.
All right, that's the view on Bajaj Finserv. I hope that answers your query. Let's move on to the next one. Then, okay, we also had a query from Saurabh Chaurasi on Bajaj Finance. Hope that answers your query as well. But Madhukar wants to know your thoughts on a LIC Housing Finance. Making a loss of a 19% here, Chandan, wants to know whether, she should hold, average or exit. Any thoughts here? Stock is trading down today by almost 0.5% or so.
So LIC Housing Finance is in range where supports are intact. I believe one can go for buy on decline or can play the range bound bias with support of 590. One can look for an upside swing to a 615. So 590 to 615 will be range. One can play this range to get some swing.
Okay, that's the view on LIC Housing. I hope that answers your query. One more stock that a query that has come in is on a Nazara. Just want to see what the stock is doing right now. It's extremely flat, but in the last 6 or 5 sessions, it's done fairly well. monthly performance has also been pretty good. Now somebody, Ratnakumar Solomon wants to know whether the current price is good for him to take an entry. Would you advise, do you see more momentum on this particular counter going forward?
Yeah, so Najara is in action from last few days. I believe positive bias could be there. However, we have seen a consolidative move in last 3 days, but undertone is positive. So with support of 1300, one can look for an upside target towards 1380 to 1400 in the counter.
All right, that's about Nazara. Then the other query then that I want to take up on is RBL Bank. Advait Joshi wants to know your thoughts with a 1-year perspective. These mid-cap banks have been doing fairly okay. Yesterday also the likes of RBL Bank were buzzing. Do you think it's time to ride this momentum and look at buying into an RBL Bank, at least with a 1-year perspective?
So RBL Bank, I believe the buying interest is clearly visible in the mid size bank, and trend is positive. It has been making high tops, high bottom from last almost 12-13 weeks. Even on daily chart, consolidation breakout is seems on the chart. So with support of 221, I look for an upside target towards 235.
Okay, that's the view, Advait. I hope that answers your query. Let's take a look at some other queries then. Eternal, that's one stock that Komal Makecha is focusing in on, and wants your thoughts on this particular counter for the next 6 months. Particularly wants to know the target and stop loss for an Eternal. What would be the level then that you would suggest? And stock has not done much in the last 5 sessions. Even the last 1 month hasn't been all that good, saw 5% gains or thereabouts, but it's around the 250 level, not very far from the 50-week high, but it's been sideways. Would you look at levels beyond 264 on an Eternal?
So Eternal is positive to range bound. Buy on decline could be seen here. I believe with the support of 241, one can look for an upside target towards 260, 265.
Okay, that's the view. That's the level to watch out for. I hope that answers your query. Let's see which are some of the other queries. AB Capital. Nitin Shahji wants to know whether AB Capital, Aditya Birla Capital, is good for a fresh entry. Thoughts? Your thoughts, Chandan? Should one look at this particular counter in the NBFC space?
Yeah, so selective NBFC counter could see selective buying interest. I believe some support-based buying could be seen. However, the stock has seen a major breakout on the chart. If I look at the price behavior, I think this breakout is happening after 9 long year after 2017. So high top, high bottom is clearly visible with support of 249. Look for an upside target towards 270.
Okay, Aditya Birla Capital, that's the view. I hope that answers your query. Last query for the day then. This one's coming in from Pooja Khanna. Wants to know if Inox Wind is good for an entry at the current market price. Inox Wind, just want to pull up the charts and see what the stock is doing right now. It's off opening lows, seen a spike, so to say. But last 5 sessions, it has seen some bit of selling pressure, and even the monthly charts are suggesting that the stock has been under some bit of a selling pressure. At about 170 levels, is this worth looking at, or would you say look at other stocks within this space?
So Inox Wind has been making lower top, lower bottom from last 3 weeks, but from last 2 trading sessions, it got stuck in a range. I believe some decline could be seen, and the decline could be bought. So buy on decline is the stance. I believe 163 could provide support. So with support of 163, look for a bounce towards 182.
All right, that's about Inox Wind. This wraps up our query segment for today. But Chandan, before I let you go, recommendations for our viewers?
Yeah. So talking about trading ideas, I think one has to be very selective. The good part is that selective counter are doing well in the market scenario when index is just up by 5-7 points. The good part is our bias is positive and buy on decline instance could continue. So first trade from financial is LTF, buy LTF with support of 186. Look for a target towards 200. So this could be the first trade from our side. Apart from that, I believe that selective banking name could be in focus. One stock which could be from defense pick. I can talk here about the counter like GRSC. So defense counter and action major trend of the counter is positive. So with support of 3150, look for an upside target towards 3380 in GRSC. So these are the couple of names one need to keep in mind for the day.
Right, that's the view. Then those are the recommendations coming in from Chandan. With that, Chandan, would like to thank you as always for taking out time and joining in this morning. Look forward to our next interaction as well. Hope you have a great trading day.
Thank you.
Thank you. Well, on that note, quickly take a look at what the markets are doing before we bring on board our next guest for today. The Nifty is just about breaking into the green territory, 24,820. That's the level on the chart. So we again managed to edge back above that crucial 24,800 level. This level has been emerging as a crucial support now for the index. Sensex is well up 15 points or thereabouts. The mid cap index, however, has slipped into the red marginally so, but still it's in the red, and the breadth is also looking pretty okay at the current juncture. Good point that the bank Nifty is also back in the green. So yes, some bit of recovery because Wall Street overnight didn't do much. They did digest the commentary from Fed, but there's hardly any dire reaction, so to say. But going forward, how are things looking in the near term? Let's touch base with Sunil Subramaniam, big market voice, and get in his thoughts. Sunil, great as always to have you. First of all, we've had the Fed outcome last night. Of course, he held on to rates that was in line with consensus. In terms of the dot plot, they've stuck to the 2 rate cut that they had earlier indicated. But for 2026, they have scaled it down to 1. I mean, nobody knows what will happen from here in terms of US action, with respect to Iran, Israel, and also in terms of what impact tariffs will have on inflation. How are you looking at the commentary, and what do you make of the scaling down of the rate cut to 1 for 2026?
I think that's a very positive sign because it means that the Fed doesn't see that they need to do too much to make the economy revive. I think these 2 rate cuts are a recognition of the fact that some kind of slowdown will occur due to the tariff-related uncertainty. But they feel that with just 1 more rate cut next year, the economy should bounce back. So I would read this as a positive signal that they don't see the US slipping into a long recession because of this. And I think that's because the China deal has more or less been signed, the UK deal with the US has been signed, and Trump also indicated yesterday that he's going to sign a deal with India. So I think that the fact that Trump is bringing all of this to a conclusion, and maybe by Christmas, so that's it, typically end of the year. So uncertainty will probably lead to a slowdown in the current context. But if you look at it, he's charged 55% tariffs with China. So overall, I think that his expectation that it will not pass on to too much inflation is also reinforced by the Fed saying they'll do 2 rate cuts. Because clearly, compared to the 130, 140% numbers that he's talked about, they've come down much more. So if you take that, an average of, let's say, 15 to 20% tariffs will right. Those 15 to 20% are something which can be absorbed by the intermediaries of the US companies which are importing on the chain, and the income actually goes to the US government, right? The tariff income. So to that extent, I think that inflationary pressures are not seen to be as threatening to that extent. So I would say that from that context, right, I would read this Fed situation. Naturally, the Fed always responds to data on the ground rather than to any stated strategic direction. Okay, so you should take that with a pinch of salt because at every point in time, the fresh data will make them change the dot plot and change the stance. But as things stands today, the fact they're talking about 2 rate cuts later means they're supportive. But at the same time, only 1 more rate cut next year means that they don't see that Fed needs to do too much to make the economy bounce back from I don't say recession, but from a slowdown.
All right, got your point on that. But let's talk about the market. We have been fairly okay. As I was pointing out, 24,800. We've been able to manage this level here, pretty okay, smartly, in fact, over the last few days. Here on, would you say that there isn't much downside because we've digested pretty much everything very smartly?
Well, I would say largely true. I'll tell you where the downside will be if the US steps into the war, and then when the does that, then all US installations all over are subject to attack by Iran, and the fact that that might tip Iran's hand into doing something strong on the Hormuz Strait transportation. Right? See, so far they have laid off from that, but if that happens, I see oil spiking further in the short run. So I would say that by and large, it's what you're saying is true. But I think Trump's also making noises about that he might go to war. I think he came back early from the G7 summit. His statements seem to indicate that the US wants to up the ante, which is not good news from the fact that then it's not a reconciliation with Iran. He's trying to threaten Iran into signing a deal, which I don't see that Iran will respond to. So barring that, if America actually lays off and uses this just as the saber rattling, right, and not actual action, what do you say? I agree with you that Indian market has absorbed probably the worst in the current prices, barring that development, which we need to keenly track over the next. On the contrary, right, I would say that uh, leaving that aside, the Indian markets are actually now poised to benefit from a positive up move, either of the war settling down and oil price retracing back, because it's entirely this oil shock that has caused this the price to rise, the war shock. So if there is an easing there, actually it could mean positive for Indian economy if the oil retraces back to the mid 60s. That's one. Second is of course the BTA signing. Again, as I point out, Trump talked to it saying I'm going to sign a deal with India. That will be a huge positive booster to the markets because a lot of the tariff related sectors are still having the overhang of uncertainty, and their valuations are the one where there is space because market participants are still hesitant to commit to saying that India will win this war in the tariff BTA but lose that war, right? There's still uncertainty over which we will win and which we will lose. And it's wrong to think that we will win every battle on the tariff front, right? So to be fair, that uncertainty overhang is still there. And when that gets clarity, right, in signing of the BTA, some good, some bad, markets will then seek to touch new highs. And that's where FII flows might again come back and support the market. So far as domestic liquidity, which is holding this market at the levels that is currently seen.
Sure, got your point, Sunil. But let's talk sectors then. For consumer durables like AC, for instance, of course, there will be a hit on volumes due to early arrival of monsoon. So, how does really one approach these AC players now? Because we all know that there will be more disposable income in the hands of consumers post the tax cuts that were announced in budget. Then there was the rate cuts as well that came in from RBI. So all in all, there will be more disposable income in the hands of consumers. But given the fact that there is a headwind, how would you approach the AC makers?
So I think that, see, the big season for them is almost over, which is April, May, June, right? And we are now ending the end of June. So I think that in the rainy months, right, obviously the kind of durables you mentioned, air conditioners, water coolers, are not going to drive this. It will probably be some other consumer discretionary items, right? So as far as these numbers are concerned, some of that is already in the price because the summer was fairly hot. I think Delhi saw very record high temperatures. So I would see that I would expect the numbers when they get displayed. So July 10th, when the earnings season starts, it'll give you a sense on whether the heat wave actually led to those greater sales, right? But you're right that with the oncoming monsoon coming through, those demands are not likely to sustain, except to some extent of a festival season bonus related buying. So I would still say that some people will still wait for a Ganesh Chaturthi or a Diwali bonus to make those durable purchases. So I would still have some hope for some kind of a sales pickup around that. But I would take the attention away from just durables to a broader consumer discretionary space of auto reality. So the liquidity that you mentioned, hands of consumers with the rate cut pass on. I think now the situation is right for a transmission of the rate cut with liquidity supportive, RBI also having a massive rate cut. So the long end of the borrowing is where the leverage is the maximum, right? A small drop in EMI means that you can probably put another 25 or 30 lakhs into a bigger house. So I think that that's where I would see the real things come through in terms of the market, that the broader discretionary space will benefit. And within durables, yes, the cooling related durables, obviously their best season is now coming to an end.
What about jewelry makers, likes of Titan, even the other names like Senco, Thangamile, Gadgil recent listing? Gold is, of course, back in focus amid safe haven rush, and if this, Iran-Israel conflict escalates further, there's no sign of de-escalation. We all know, and once US joins this fight, will gold prices head higher from here? And if that happens, will demand get impacted? Rising prices, and in that sense, how should you look at those jewelry makers?
So, yes, I do think that gold will continue to rise. No, it went up about 25-28% over the last year, but don't expect the same kind of rally, but definitely double-digit growth in gold prices. And it's not just the continuing uncertainty. The Fed's two rate cuts will lead to pressure on the dollar. When the dollar is under pressure, gold is a natural alternative. And I think I read a lot of reports saying that central bankers are all looking to increase their gold reserves in the coming year. So all of this is a positive for gold prices. Now, what is the impact of gold prices? Yes, to some extent, it will hurt people's buying because the jewelry, when people see these prices rising, they like to postpone their purchases. But bear in mind, a significant proportion of this happens with trading old gold jewelry, right? So what happens there is that then that comes in as sales for these companies that you mentioned in the gold space, is that their business will get, because at these times when price rise, people say, okay, let me take my old gold, old jewelry, which is out of fashion, maybe bought years ago, and trade it in for new. So you'd see sales pick up there coming from a traded jewelry. One. Two is that all of these companies hold inventory of gold. So to that extent, from a valuations perspective, their stock of gold rises in that valuation. And to that extent, their working capital limits, if they need to borrow from a bank, you have a higher value of gold to pledge to get the money. So that's again a positive for them because all of them have been buying gold continuously to stock to make jewelry over this period. So I think overall, that's why it's a positive sign. And in India, no, if it's a wedding season, festival season, a gold purchases, Diwali for Dhanteras or a wedding, you're not going to stop that just because gold prices are high. So a certain amount of core demand which comes from an event like a Dhanteras or like a wedding, that will continue. It's only at the margin that, a fashion jewelry or something, you would think a little bit. Like I said, but trading old gold will again come in and substitute a part of it. So overall, I remain reasonably positive on the jewelry side because they are also part of the discretionary retail, right? Which is where the higher disposable incomes will get deployed. I would say that that's something that will also help the gold demand from retail.
Okay, at the margin you may see some impact, but the demand, over the long term should remain intact despite rising prices. That's the takeaway. But let's talk about the recent shift in expiry days, right? Most brokerages, in fact, Street feels that the volume and market share pain that BSE will see may be short term in nature. And over the long term, BSE will manage to regain market share, especially due to the long term contract liquidity and the common contract note that allows traders to trade both in the F&O and cash market. So do you concur with that view? Do you think that shift in expiry day to Thursday won't be such a big setback for BSE, at least over the longer term?
Yes, I concur with that view. These are short-term readjustments that will happen, but in the longer run, I don't think that that matters. I concur with the view that you spelled out just now.
Sure. Last question really, we had the SEBI board meeting yesterday, a lot of key takeaways, but I want to know your thoughts on particularly the move to allow liquid and overnight fund units for mandatory deposits, changing fund flows meaningfully. Could this nudge greater flows into these categories?
Yes, absolutely. And I think SEBI wants to divert them because these are lower risk products than even the regular liquid funds, right? Because regular funds have a 30-day time frame, but these are overnight are far less risky and they'll improve liquidity at the very short term. So I think that this is a big booster for that category. And it's good for the industry to diversify it across these spaces because the short-term liquidity that the RBI is doing essentially plays out through these categories in the mutual fund industry. So the transmission of the liquidity measures of
one
RBI.
last.
Yeah, sorry, go ahead.
Sure, go on, Sunil.
No, I said so.
No,
the transmission of
the
transmission of liquidity into the system, right, will be enhanced by the allocation of money into these categories because they are ideally tuned to the short-term fluctuations of the repo market.
Got your point. Sunil, one last question. We had some brokerage notes on IT and we've been talking about IT almost every time we speak. But off late we've seen buying interest in IT. This particular sector has provided support to the market. Some brokerage notes were saying that it'll be a good idea to sell on rise. Would you concur, or would you say that no, keep buying them because going forward, the recovery is expected to kick in case the US markets or US economy doesn't slip into a recession?
Okay, yeah, I am actually right opposite to that view. I say buy on dips rather than sell on rise. Because if you take a 6 month, I think the IT index is still hugely underperforming the broader markets, right? Whether it's Nifty or Nifty 500. So clearly, IT has taken a lot of the overhang over the last few months in terms of the fact of the US going the credit downgrade of the US, and that US companies may not do so well. What are the tariff impact? All that negative is in the price. But the stability of IT in terms of its returns, I think, is a huge positive. And I think the IT rally has been, despite the fact that FIs have not been very strong players in the recent past. So clearly, domestic fund managers are the ones who have reallocated to IT, given the way forward. But when FIs return in a big way, which I expect again, as I said, for me, the BTA signing is the next trigger. When their flows come in, right? When a significant part of those flows tends to be passives and all that, and we should get their share of IT allocation. So I would say that IT will continue to receive liquidity support, given the fact that over the last 6 months, it's been the worst performing sector. It's only the last week or so that it's been rallying. But over a 6 month, you take the returns, they are hugely underperforming. So there is still value in the IT pack because that consistency of their earnings, right, will get a premium. So I am of the view that the correction was overdone. We have just started the rally, and I'm not sure that you should be selling on dips. On the contrary, I would continue selling on rises. I would say that you should be actually be waiting for any corrections that happen to accumulate IT, because I see that it is the big FII play that will drive it up further, and rather buy before that play fully happens than wait for that to happen.
Got your point. Buy on dips. That's the strategy you should adopt when looking at IT stocks. But with that, Sunil, always a pleasure getting in your perspective. I look forward to more conversations, and hope you have a great day and a great weekend. Of course, it's still one day away, but still I hope you have a great weekend as well.
Thanks, Nandita. Thank you.
Thank you. Well, before we call it a day on the show, take a look at the market. We are seeing good gains at the current juncture, 50-point move. Although we have been trading in that range of 24,700 to 24,900, in the last few sessions. Yesterday as well, we managed to reclaim 24,900. But we again took a U-turn and ended the day in the red. But 24,850, that's back on the charts as of now. Advanced decline ratio is also looking fairly strong, but that was the case yesterday as well. So too early to say whether we'll end the day in the green or not. But for now, it's looking okay, and more gainers than losers. So we can take heart from that fact as well. But let's see how things really pan out. I'll see you again, with closing bell at 3:30 p.m. So don't forget to tune in for that. Till then, have a great day, and stay tuned to Money Control for all your other news and updates.